Hello guys. I hope you are doing well. So this is going to be our chapter number 2. On Sundays I always give you 2 or 3 charts of things that you can just take advantage of any time from Monday until Friday the coming week. So here we just do a pure price action. So if you're new here and you like this style of trading, you can just give us a sub. And if you also want to learn more of this style or the approach, you can also leave a comment so that you can join the mentorship for the next coming month. All right, let's get started. So the second chart that we're going to look at today, it's Euro USD, which is something that we don't look at very often. So I just wanted us to do the stuff that we normally do and then something that we hardly look at. So we're going to do Euro USD. So let's get started. You know that we always start with the highest time frame so that we know or the bigger picture, so that when you're moving down to smaller time frames, we do not go against that. At least if you're planning to take trades that you're going to hold for days and weeks. So you need to know the bigger picture before you can come to that conclusion. So the highest time frame that we have, it's our the monthly chart. So let's see what we got on monthly chart. So what is important on this is that at some point, the last time when we spoke about this one, we were hoping that this area of support, because it was very strong. I mean, the price has been above this point from 2014, somewhere 2014. It has never went lower than this. It's just been playing like that. So we're hoping that you're gonna go up, but you know that nothing is guaranteed, and we know that the more a level is being tested, the weaker it gets, but we don't know when it's going to be broken. In this case, it was broken there, which means the price has reached a lower point. It was reached the point that it has never been to for the past 7 years or so, you see. So that's something that no one saw it coming. So now if this support is taken out, then what does that mean? Luckily, this is not the all-time low that we have on this chart. So remember, we just need to know where is the nearest support on this chart and where is the nearest resistance, so that when we are trading, we know what we are targeting. We know that if we are taking long-term trades, where is the price coming from and where is it most likely gonna go to from here. So now, since it broke this support, it means we have to remove this from our chart and shift down and look for the next support. So that's why we are saying until this is taken out, you couldn't trade against it. But now that it's taken out, we know we can now neglect it and even remove it from our chart, so that we're focusing on what? The next one. So the next support that we have on this chart is here. Okay, this color is not so nice. So let's just use the horizontal line so that you can see we don't hide anything. So remember, once one is taken out, you move down and look, target the next one. I hope you can see what I'm using to draw here. From somewhere around it there, and until the last point might not be so relevant right now because of what? We are far from it. Somewhere around there. So basically, I used this point and the lowest point there to mark that market pause. So that's the nearest support on what? On monthly, since the one that we had since 2014 was taken out. So the next one we have is this one here. So now that this is our nearest support, where is the nearest resistance, so that we know that on monthly the price is most likely going to move from this to that. So because we had a very strong area of support, we need to find the resistance that broke that. So in this case, let's remove some of these drawings that we have here. Yes, in this case, when the price came back to this support, the one from 2014, what it did was that it tried to react to it. You can see we did have, for 1 month there, we did have a bullish candlestick, but that bullish candlestick did not give us anything. It was just a candlestick. It didn't engulf anything. It looked like a tight candlestick. So it was just nothing. It didn't give us anything. So that's when the bears came and did what we call bearish engulfing. And this is something that when it happens, especially at a location where you are expecting the opposite, you need to be worried. You cannot be, chilled when you have a buy trade and the price is hitting areas of resistance. or the price is forming bearish structures, you cannot be relaxed. So that's where you need to ask yourself, this does not look good. So yes, we understand we are at the support, but when the bears can dictate the price like this and form a bearish engulfing at an area of support, that's where they're saying, that's where you're like, no, the bears are not completely out. They can defeat the buyers at their own territory, and it happened here. They pushed lower than that. So that's when they pushed, and you could, on your smaller time frames, if you got your trades to go lower than that, now all of that must come to an end. What you've been selling, when you've been selling, now all of that has come to an end, because we have touched I think this, if I put it at 9.5, it should make okay, should make sense. Let's put it at 9.95. Yes, so that is a very nice number that we got there. So now that we have hit the monthly area of support, the next one, you need to make sure that all that you've been doing on your smaller time frame, it needs to come to an end, because the price might just react from this big fresh area of support and push up. So when it's pushing up, where is it most likely gonna go to? The nearest zone that you have, it's your resistance. The nearest resistance you got is this one here. So this is your monthly resistance, and this is your monthly support. So meaning right now, because we are at the monthly support, we are not saying the price can just must just react immediately and go up. We just see anything is possible. You can still play here for a couple of months before taking off. But we are saying, if you are moving down and you get trades to go long, that one, we know that you have got a backup from the highest time frame. So the pool here, it's a pool of buy orders that are big. So that's why the price from here in the next couple of months or so, it can go until that resistance, but it might still play here before taking off. But we're just saying we have hit the support, which means if you've been selling, you can't continue selling and try to sell against this or try to sell past this, because you're going to be disappointed many times. But yes, it can happen, but we shouldn't just force things like that. So let's move down to our weekly and see what you got on weekly. So on weekly, this is the structure that we got. So the price has been moving down, forming swing highs, swing lows, swing highs, swing lows, like that. Lower lows, lower highs, lower lows, like that, which is a structure of what? Downtrend, because we said we are in a very strong downtrend. So now on this time frame, this is the trend line that we got. This is our bearish trend line on our on our what do you call this, on our weekly. So on weekly, it seems like we touched that that monthly support. We got rejected. We went up. We did not even reach the nearest support or resistance on this time frame or the trend line. We just reached the trend line, because remember the trend line was even there, because we had this, then your resistance, and the trend line was the same one, and we went until the trend line. We don't trade against that. We know we are coming from the monthly support, but this is a weekly trend line that is still holding. You cannot just assume that it will be broken, which is why when you're getting when you got your trades there, this is something that you need to exit. That's why I always tell you that you target the next opposite structure. For as long as the structure is not broken, you cannot just trade like it is not there. You cannot just take a buy here and then do something like that. If you are trading on weekly, if you are trading on monthly, yes, you don't have these zones, you don't have all of that, then the weekly might not bother you much, because you're trading on monthly. So anything lower than that, you don't count much. But we hardly have people that are executing trades on monthly. So if you're executing on weekly, anything on weekly, it's an opposite structure. Anything on monthly, it's an opposite structure, because monthly is bigger than what you're trading. So which is why I'm saying you cannot trade against anything. We cannot do that. So let's see what you got now. So the price reacted from that trend line. It came back. This became a new point. You can even adjust it and bring it lower, but it will still be around the same area. So if you try and put it, you see, it didn't change by much, so it's still the same. So that's your weekly trend line. It came back into the monthly area of support. It still pushed up until the trend line. It still got rejected again until there. You see, that's why I'm saying, so even when it moved to the trend line, in this case, it went to the nearest resistance. In the previous one, it moved up, it failed to hit the resistance, but the current one, it moved up. You hit the next opposite structures at the same time, which is what? The resistance and the trend line, which is why I'm saying you cannot trade against those. You cannot trade like they are not there. If you got your buy trades, yes, that sometime you're gonna buy here, exit there, the price breaks that. You lost nothing. You hit your take profit. You made money. That's when you'll say now those opposite structures that I was scared of, they've been removed. Which means if I get a pullback, I can buy because I know they are no longer there. I'll be targeting the next one after these ones. So that's how you should trade. So that's all that we have on weekly. It is still bearish. Weekly is still bearish. Yes, we understand we are at the monthly support, but weekly structure hasn't changed. At least if we were outside like that, we will say now weekly structure is changing to see that those bulls at the support, the monthly support, those big bulls are pushing in. They are coming in. That's why the price is changing the thing. But currently, yes, they tried to move up. They even had what we call a bullish engulfing, but that bullish engulfing just pushed the price until the next opposite structures. But we never managed to go to the other side. So that's all that we have on this one. So the support would be, you will have to go back and find the support inside here on weekly, but the resistance is that one there. Because of what, we cannot take this as the nearest support, because this is just the one that gave us that, but it did not do anything. So it means currently on weekly, the support, you're gonna have to try and find a support inside this monthly thing that we are marking. So you're gonna have to find, you can use this one there until the price pushes up and break the trend line. Then yes, you can say I've got a new kid there that I can buy from should I get a pullback. So let's see what we have on, this is weekly. Yes, let's do daily and see what you got there. So remember, this is the weekly trend line that we had when we were still on weekly chart. And remember, each time frame can have its own trend, it can have its own, everything. So this is where the support was hit for the first time. We moved up, we broke this, went up until the next one, which was inside that weekly one and around the weekly trend line, and then the price got rejected. And now let's see what you got here. This is our daily one. So on daily, this is the lowest point, and then this is the high, this is the high. We can use that. So which means if we are adjusting the trend line, we know that we have a weekly trend line there. So let's remove it and bring a daily one, as long as we don't want the stuff to overlap. There's your daily trend line that you got. So this is our daily trend line. Yes, the structure is changing here. So this is our daily trend line. And when we had this lowest point, it then pushed up and broke the nearest area of resistance on daily. The daily resistance has been taken out, you see. And then we moved, let's remove. Okay, so this is the trend. Okay, it's fine. So I hope this is not going to confuse you. This is part of the price, the open and the bid and what. So that's not the horizontal line that we have. But maybe let's change the color of our line, which is this one. Let's make it an interesting color. Yes, let's go for something bright. Yes. So this is there. Remember, this is our monthly support. It starts there. So we've hit that monthly support, this point, and then we went up, came back to it, went up, came back. Yes, we cannot say it has been hit many times, because they don't count. These ones, they don't count because they are daily points. But when you're looking at a monthly support, we have to check. When we're saying it has been hit many times, it has to be what? On that time frame. So the support on weekly and monthly, it was formed there, and it has never been hit before. This is the first touch on monthly, so it's a fresh monthly area of support. Yes. So now on daily, we did have a market shift. Remember, on weekly we failed to break at least the trend line. So here we broke the trend line, we broke the nearest area of resistance, which means this support here is the new guy. This one here is the new guy. It is the one that gave us a move to the upside and broke and caused the structure to change on this time frame. So which means, should the price pull back to it, you are more than welcome to buy, because even the location allows you to buy. You are located around weekly support, monthly support, so you can take a buy. But when you're taking a buy, don't expect it to do something like that. You still need to keep in mind that let me bring it here. Maybe there's a guy in group 2, Damusa, if I can just mention your name. So this is how you go about it. So when you're trying to bring all the concepts or all the time frames together, you are saying that I know what I saw on weekly, On weekly, this is our trend line. We drew it from there to here, and then the push up failed to break it, meaning on weekly, remember, when we are on weekly, we failed to get what we call when we had this, we failed to move outside and have a change in structure. So on daily, because this is a weekly trend line, so you can neglect that. This is a daily trend line. On daily daily time frame, we did have change in market structure, something that we couldn't see on weekly. So which means if you get a buy here on daily, you cannot neglect this weekly one, unless if the weekly was broken. In this case, it's not broken. So meaning the way you're going to set your take profits, one of that TP number one must be around that trend line. Because of what? It can still cause the price to come back. Remember, it costs it to come back, it costs it to come back, it can still come back. Yes, we understand that when the zone or a trend line has been hit many times, it can be broken, but we don't know when that is going to happen, which means when you are setting our take profits, we need to use it as one of what the next opposite structure. So meaning when you're getting your buy from this, you'll still be targeting that as your TP1. Then you can leave one trade running. So that's how you do it. So you can see that you touched that the thing, which is what your daily support, and we're saying it has got higher chances of going up until there. I hope your confusion is gonna loosen up a bit, because there's nothing confusing. You just need to understand, where did I have the zone on weekly and where did I have the trend lines? Are they still holding? If they are still holding, it means they are still part of the next opposite structures if I'm executing on daily. On daily, yes, the structure changed. We have had what we remember we said weekly is still bearish, but here we can say the daily is to the upside and we are around the monthly support. I can take a buy, but I cannot yet make it a long-term trade because of what? I have a higher time frame, higher than what I'm trading. I've got a weekly trend line there that's gonna block my trade. So meaning this the buy that I'm getting from this, I cannot make it a long-term trade until the price on weekly, we have a weekly candlestick outside there. That's when you can say, oh, the structure on weekly has changed. Then we can target the next one, or even that monthly area of what the support that we have, or even this one. You see, but until we have broken the structures that we have on our way, we're not gonna have a long-term trade. Currently, we understand that this touch was a fair trade or a valid trade. Then you'll be targeting this trend line. This is a thorn. This is gonna be something that's gonna work against you until it is taken out. I hope you are fine now, my guy. There's a guy in group 2. I already mentioned his name. So this is how I try and simplify it. But with him, I understand him being confused as like currently, because we are not yet with the classes for the mentorship. We are not yet at the application level. We're still doing the theory. So from this coming week, I think by Wednesday, we'll be doing this stuff, this application, this top-down analysis. Then that's when they will gel in nicely for him, because he understands the individual concepts, but bringing them all together and apply them at the same time might be a bit confusing. But with him, I understand we haven't started application. So I hope if he's watching these videos, he will get the idea, so that by the time we do them in a group as like part of the mentorship, everyone attending, it will make more sense. So this is all that we have on daily, right? So we are saying the conclusion here, because this is our support and this is our resistance on daily. We're still targeting the next opposite structure, which is that daily support resistance, and that weekly trend line. Whichever one is hit first, you're going to exit there. So that's all that you can expect from this one. This is not something that we do most of the time, but I just thought I should give you a different chart. All right, so if you maybe said this one here, because remember the daily one starts there, but if you try to zoom in and say I want this trade a smaller thing, maybe if it comes back here, you can take it and say I'm taking a buy from this H4. Let's remove this one so that I show you how to link different time frames. We understand that the monthly support starts here, the daily support starts there, and it ends here. The daily support, the monthly support, we can't see where it ends because of what? We don't have that. We can't see because we put a horizontal line still lower than that, right? So here we can see when where our thing ends, the daily support. So it starts there, and it has already been hit. But if you didn't want to buy using the daily support, you can say, let me drill down more and use this H4 support. For as long as the H4 support is inside the daily support that I'm trying to buy from, then I'm safe. So you can say, let me drill down and say I will buy from this. So let's say that this is where those ones who are buying from daily got their trade. So let's say for some reason the price does not take off until that, remember, we are targeting that trend line and that daily resistance. Let's say for some reason the price does not go there, it decides to come back. For as long as it is still inside the daily support, their trades are still running, but they're still running at a loss, slight loss. And then remember, the support on daily goes up, down like that. So maybe it can move down deeper into the support before taking off like that. So it means that one that says I want to drill down so that I get my stop loss is smaller, they are going to get a trade here and join the ones that are already in the trade. From there, they are running at a loss, but they are going to run it up like that. It means the one that entered here is going to have a bigger profit margin, like more than these ones. But the disadvantage with the drilling down like that is that sometimes these ones are entering the whole zone, you are waiting inside so that you get a smaller more discount, and then the price takes off without you. They are in the trade, they make money, you lost. You see, so all of them, they've got disadvantages. So the disadvantage of entering here is that should the price move down and violate this daily support, it means their stop loss is going to be too big. But mine, if I entered here, is small. You see, so mine, when we are losing, I lose less money, and I stand to make more because of what the distance from where I'm entering until the area that we are targeting is big, more than the ones that are trading the bigger zone. You see, but you need to keep in mind that there are times where the price will just touch the zone and then take off, and then it means if you are waiting for discount, you miss the trade. So you see, there's nothing that is like 100%, or it only has like good side, it doesn't have the negative side. So that's why you just need to pick the one that works for you and stick to that one. So basically, this is all that you can expect from this one. So those ones that got the trade, this is a very valid trade. You can target what your next structure. So it can be that because remember, we are buying that daily. We're saying daily because daily is the only one that changes the structure. So we are buying this daily support. So if you are targeting, you're buying on daily, you are targeting what? At least a daily resistance or a weekly trend line that runs like that. You see, so that's what we are targeting. So maybe if it doesn't take off, you can try and join from there, but it might not happen. It might just go until that. So that's all. That's our conclusion on EURUSD. EURUSD has got higher chances of going up until at least here, right? Because we don't know what's going to happen when the price hits that weekly trend line again, because it has been pushing the price lower and lower. So we don't know what's going to happen. So that's why when the price gets there, I'm saying you must exit. So basically, that's all that you can expect from EURUSD. So this is how we do the top-down analysis. You don't have to complicate things. You don't have to. You just need to make sure that your approach stays the same. And you need to have reasons behind why you're doing something. You can't just say because the price turned here, it must turn again. But why? That alone, to say it turned here before, it does not cut it. You need to have more reasons to say no, because it turned here and then it did this, it did that. So I think when the price comes back to it, it has got higher chances of what respecting that zone. The same way we are saying, yes, it turned here, but it also what broke the trend line, broke areas of what resistance, which is why we think when it comes back, this support is going to be protected because of what it did. So that's what I teach. So if you are interested in joining with the next group for the mentorship, you can leave the comment. But otherwise, this is all that I wanted to share with you guys. The top-down analysis on what? On EURUSD. Maybe you will be able to what? Take advantage of it when the market opens, or maybe on Tuesday, or whenever the price gives you what? A reason to go long, because we are saying the price has got higher chances to go at least what? Until this daily resistance. So that's it, guys. So if you haven't subscribed and you like this style of trading, you can just hit that subscribe button and the bell icon also, so that when I make uploads, you do not miss them. All right, guys, I'll see you in the next one. Thank you.